the traders are answering your questions. First up, this one's for Joe from Ed in San Carlos, California. Joe, he asks, what percentage of bonds do you think should be in tips in a 60-40 portfolio? Bonds equals 60% in the current environment. Joe?
Ed, thank you for the question. So basically, the premise of having tips in a portfolio is the same as having gold. You're afraid of inflation. Well, deflation is the risk right now as it relates to having gold or tips to make yourself sleep comfortably at night. I'd say somewhere around 3% of the overall portfolio I would have in either gold or tips, and I actually like tips better than gold.
All right, this one's an options question for Dr. J. Art in Washington asks, should small investors avoid trading on or around options expiration days? John?
Mel, I don't think it's so much a question that Art's asking about whether a small investor should or whether it should be a more knowledgeable investor, because that's deep end of the pool. Those final hours of the options trade are really volatile because it could be something or nothing very quickly, Mel. So I'd say it's more a question of how much trading they've done as to whether they should do it, not a question of how big or little the trading account might be.
All right. Well, Anthony on Twitter writes in, is it a good idea to buy Schwab ahead of their TD acquisition? Shannon, you own Schwab. What do you tell him?
I don't think you need to buy it ahead of the acquisition. I think that there's going to continue to be competition here. Low rate environment isn't great for Schwab. The acquisition, we believe, will be accretive, however. So whether you buy it today or over the course of the next several months, it's probably a good long-term buy. But there's no rush because that accretion is really going to be a 2021 story.
All right, this one's from Joe in Long Island, and Joe asks, I'm a relatively new investor. Should I reinvest dividends back into the stock or pocket that cash? Rob, give him some advice.
All right. Well, good question, Joe. It depends on if you're a total return investor or an income-based investor. And I would say, you know, if you're an income-based investor, you're looking for return on your capital, for that cash flow. If you're a total return investor, you're looking for the compounding effects of reinvesting the dividend. So I think it depends on the context. If you're a relatively new investor, long time horizon, I would reinvest your dividends.
All right. Mo in Canada has this question. What are your thoughts on the future of Spotify? Joe Terranova, why don't you take this one?
Well, yeah, I think the future is a good one. Recently made an all-time high somewhere right below $200. I think it'll eventually exceed there. The quarter was a good one. The subscriber growth exceeded expectations. So if you are along the stock with it trading somewhere around 185, I would hold that position for a play above 200.
All right, and this one is Robert in Port Washington, New York. Writes in, why is Netflix's stock price going down? They have the most subscribers and are releasing new content. Shannon, you have this one.
Robert, thanks for the question. I think Netflix is really in this basket of stay-at-home stocks. I actually trimmed the position back on April 30th. I purchased it right around kind of the 305, 310 mark and felt like it was a bit ahead of itself. The competitive environment remains significant for Netflix over the next couple of years as they expand internationally. And they're really looking at the juggernaut that will be Disney Plus as the main competition. But this is a good long-term hold, but you probably will continue to see a bit of a rotation out of stock as people move out of these stay-at-home stocks and into some of the cyclicals we've talked about in the show today.